Hello, and welcome to the legal session of the Bitcoin for Corporations Summit. My name is Ming Shao, and I'm the General Counsel of MicroStrategy. So from the other sessions, you learned why more corporations and institutional investors are adopting Bitcoin. And then you saw a little bit of what a general corporate playbook looks like for integrating Bitcoin into a Treasury reserve strategy. In this session, we're going to share with you the main legal lessons that we at MicroStrategy learned in our Bitcoin initiative with the goal of demystifying some of the most important legal aspects and then showing how, from a legal perspective, all these things come together to support a successful corporate Bitcoin project. Now, I know that when some people hear the word legal, they think that things are going to get technical or perhaps very specialized and hard to understand. Please don't change the channel. We have made the presentation and discussion format geared for non-lawyers. And I think that's actually very important. As Fong and Jeremy were touching on in their last presentation, we found that implementing a Bitcoin corporate strategy really does require a lot of good collaboration among different individuals and teams, especially the finance, legal, internal controls teams, the board of directors, our senior most executives, external advisors, and other constituents in the organization. And so we want to be sure to promote cross-functional learning that we think is useful for pretty much any corporate Bitcoin project. Speaking of collaboration and advisors, joining me in the session are three other panelists. All of us worked very closely together on the legal matters for MicroStrategy's Bitcoin initiative. They're going to introduce themselves, starting with my colleague, Una Green. Una?
Thanks, Ming. Happy to be here. I'm Assistant General Counsel at MicroStrategy, and I work very closely with Ming on corporate governance and securities matters. I helped Ming with our Bitcoin initiative pretty much from the beginning and worked on the legal aspects of the initiative in one way or another.
Next up is Dax Hanson. We didn't work actually with Dax before we embarked on our Bitcoin initiative, but I'm sure glad we found him since he helped us navigate a lot of the regulatory considerations. Dax?
Thanks, Ming. My name is Dax Hanson. I'm a partner with Perkins Coie, where I chair the firm's blockchain and fintech practices. And today I'll be focused on the unique regulatory and technology aspects of Bitcoin that are relevant to a Bitcoin investment strategy.
Okay, our last panelist is Tom Ward. He's our longstanding outside corporate and securities counsel who helped us transition as a publicly traded company from our pre-Bitcoin era, so to speak, to our post-Bitcoin era. Tom?
Thanks, Ming. I'm Tom Ward. I'm a partner in the corporate practice group here at WilmerHale, and I'll be focusing today on corporate governance, securities regulation, disclosure, and some policy and procedures aspects.
Great. Go ahead, Tom.
We'll find that all of these aspects work together. What I've talked about, what Dax talked about, Una and Ming, but I don't think people will find it ultimately to be overwhelming.
Terrific. So what exactly are the legal lessons we're going to be talking about? Here are the 5 that we think may be the most useful to other corporations that are starting to consider adding Bitcoin into their treasury. You can read them here, and we'll go through each one of them. Before going any further, though, I did want to make one more plug for the documents that we have open sourced. Fong mentioned them in the last session. We've published about 7 documents, and we'll be discussing some of them here. You don't have to refer to them on the website, but we did want to make sure to reference them again so people can know to go look for them afterwards. All right, so with that, let's go ahead and start with lesson number 1. Actually, let me show a picture of the documents that we have up on our website. There they are. And we will move to lesson number 1. What you do with Bitcoin will drive the regulatory issues. As it turns out, what you do with Bitcoin precisely can make a huge difference in the regulations that apply. Dax, you're a seasoned lawyer when it comes to the regulatory landscape that applies to cryptocurrencies and especially Bitcoin. Can you give people an idea of the main areas of regulation? I think it's a good starting point, other than the securities laws, which we'll talk to Tom about in a minute or so.
Absolutely. So there are three core regulatory areas that a company needs to consider with the Bitcoin strategy. And the first are the federal and state money services business laws, such as those that are administered by FinCEN. Money services business laws prevent money laundering and terrorist financing, and they impose reporting and licensing and examination requirements on non-bank financial institutions. A company that's merely investing in Bitcoin usually isn't going to trip up against these money services business laws directly unless that company expands the scope of their activities to include things like wallet or exchange services. The second area that's relevant on the regulatory side are the federal sanctions laws, such as those that are enforced by OFAC. And sanctions laws really protect us by requiring that all US persons avoid dealing with the enemy, such as criminals and terrorists on certain government lists, or by dealing with certain embargoed countries. Sanctions laws are relevant to someone who's investing in Bitcoin because Bitcoin is an international digital currency network, and it will be important for a company to vet its counterparties against those government lists. Third, commodities laws, such as those that are administered by the CFTC, impose requirements and restrictions related to trading and other aspects of contracts that derive their value from an underlying asset, such as futures contracts and swap contracts that might be tied, for instance, to things like barrels of oil. And a company that's investing in Bitcoin that may wish to hedge the volatility of the Bitcoin price may want to work with derivatives to hedge that risk, and if so, would need to take a close look at commodities laws.
Thanks, Dax. So it seems clear that many laws can apply to Bitcoin activities. So for example, if you're a Bitcoin exchange or you provide Bitcoin custodial services, there are special laws that you need to comply with or licenses that you need to get at the federal or state level. But let's focus here on the upshot for our purposes. Can you explain why a strategy of merely buying and holding Bitcoin as a Treasury reserve asset doesn't need to drag in a lot of those laws as a practical matter?
Sure. Yep. I think there's really two reasons. The first is that investment in Bitcoin is not the type of activity that these laws were intended to regulate. Conversely, a company that's investing in Bitcoin is actually the type of entity that these laws were designed to protect, for instance, in its dealings with custodians and brokers.
Great. So I think what that means is the laws are still there in the background. And in fact, a lot of those laws need to be complied with by the vendors, right, that one uses. If you're the corporation that's just buying and holding Bitcoin, your vendors in many cases are going to need to pay attention to those laws. But let's pause there on those particular laws. And then let's talk a little bit about securities, and we'll come back and wrap things up in a moment. Tom, you're a securities lawyer, and I think it's a really important question or issue that we need to get on the table right at the beginning, which is Bitcoin isn't considered a security. And it's a really, really important significant fact, because it means a lot of the SEC regulations that would apply if Bitcoin were a security just aren't going to apply. And this is particularly important for publicly traded companies, because obviously publicly traded companies have to pay a lot of attention to the securities laws. Can you explain why Bitcoin isn't a security?
Sure, Ming. Let me go through it a little. Everyone knows that stocks, bonds, options, and the like are securities. And by contrast, cash like dollars or gold aren't. The current SEC test basically says there's a security created when there's investment of money in a common enterprise with an expectation of profit derived from the efforts of others. So using this test, actually, the SEC has taken the view that some digital coins are in fact securities, mostly because they represent passive investments that require a promoter to build out a network and make the enterprise connected to that coin successful. Bitcoin's a little bit different, though. The SEC's view is that that network is currently sufficiently decentralized. Purchasers no longer expect any person or group to be carrying on managerial or entrepreneurial functions. And so that doesn't really fit within the test for security. And so if you have no central third party whose efforts are determining the enterprise and the network on which it functions operationally, there really isn't a reason to apply the disclosure regime of federal securities laws to Bitcoin. And so senior SEC officials have said that they're of the view that under the SEC's current test, Bitcoin does not constitute security. And in that way, Bitcoin in some ways is quite different from other things that you see in initial coin offerings.
So Bitcoin's not a security. What does it mean about, whether a company like MicroStrategy that has acquired and holds Bitcoin becomes an investment company?
Yeah, man, I'm glad to clarify this, because I know you get this question quite a bit from folks. Hey, we hold Bitcoin. Why isn't there an investment company act issue? And the answer to that is that the statutory definition of an investment company depends on a company either holding a specific percentage of securities or holding itself out as an entity that primarily invests, reinvests, or trades securities. So the fact that Bitcoin isn't a security for SEC purposes basically means it's outside the purview of the Investment Company Act. And so that's why MicroStrategy isn't an investment company.
Now, similarly, we get the question often whether MicroStrategy has become an ETF because we hold as much Bitcoin as we do. Can you explain also why we're not an ETF? This is an important point to underscore as well.
Sure. ETF, as everyone knows, stands for Exchange Traded Fund. And exchange traded funds are registered investment companies that invest in securities and then their interests in turn trade on markets. MicroStrategy is not an ETF in part because we're simply just not a registered investment company, basically because of that issue of Bitcoin not being a security. In addition, ETFs are structured sort of completely differently from MicroStrategy Corporation. ETFs have arrangements with financial institutions to keep their market price and net asset values close to each other by having the institution engage in arbitrage by either redeeming shares directly to the ETF in exchange for the underlying assets or by purchasing shares in the ETF. MicroStrategy has none of those arrangements. No shareholder is entitled to exchange MicroStrategy shares for any of its underlying assets. So in short, no, MicroStrategy is simply not an ETF.
Okay, so to recap, Bitcoin is not a security for securities law purposes. MicroStrategy hasn't become an investment company because of the Bitcoin that we've acquired and hold. We're also not an ETF. Let's just change the hypo a little bit. What if a company like MicroStrategy wanted to invest indirectly in Bitcoin? So not directly invest and hold it, but buy, say, shares in a Bitcoin fund. Does that change the analysis at all?
So Ming, absolutely it does. As Dax was saying earlier, how you exactly deal with Bitcoin really affects the regulatory regime involved, and that applies on the security side as well. If you invest indirectly in Bitcoin through a fund, for example, now you're within that SEC definition of a security because you don't hold the Bitcoin, you own fund shares, and those fund shares are going to be deriving their value in part from the actions of the fund manager. So in that case, the company, those would be considered securities, and the company would then have to start looking at those Investment Company Act thresholds as to what amount of securities the company can hold before it becomes an investment company. Now, there may be ways to structure fund investments to avoid tripping those thresholds, but those get very complicated and maybe beyond the scope of this presentation.
Okay, so we just did a very, very quick tour of a number of different areas of the law that can apply to a company's interaction with Bitcoin. But there's a key takeaway here, and I want to mention this as we wrap up this first lesson. And that is that for an operating company like MicroStrategy, merely buying and holding Bitcoin directly for Treasury purposes means many regulations like the money services business laws, commodity regulations, assuming you're not hedging or engaging in Bitcoin derivatives, and the Investment Company Act, et cetera, they just generally aren't going to apply directly to a corporation like MicroStrategy. And that really was an important point for us because it meant that investing in Bitcoin turned out not to be as daunting from a regulatory standpoint as we thought it might be. Now, if your business wants to do something more or different with Bitcoin, like what a PayPal or a Square or Coinbase does, then other regulatory considerations would definitely come into play. But for just buying and holding Bitcoin directly for Treasury purposes, the regulatory demands are actually much more limited. Still things to consider, but very manageable. All right, so let's wrap up the first lesson and let's head over to lesson number 2. Una, do you want to kick us off on this one?
Sure. So we picked corporate governance as one of the key points we're covering today because it's very important for publicly traded companies like MicroStrategy. It's about making sure that our board of directors and our executive officers are satisfying their fiduciary duties to the business. And it really shapes views on things such as what sort of due diligence is advisable, how policies and procedures should work, and internal controls. And in many ways, corporate governance serves as the backdrop to all of the other points that we're discussing in this session. And I really think this is all the more important when it comes to Bitcoin, because just as Tom and Dax were explaining, Bitcoin is not a conventional asset like stocks or bonds. And as evidence of that, when we checked which investments the company was authorized to make, we weren't surprised at all to find that Bitcoin and other digital assets were not specifically authorized. So we knew from the get-go that we need to get approval from our board for MicroStrategy to invest in Bitcoin, especially at any significant levels.
Now, I guess because of that, you might remember one of the first things that we did to support corporate governance was to have our executive team, as well as our board, spend a lot of time at the beginning just getting educated about Bitcoin. And Fong and Jeremy made reference to that in their presentation. And then also understanding why it could be an asset that we'd want to invest in and what considerations are implicated. Here we get to one of the documents that we posted publicly. If you go to our website, you'll see a document called Key Considerations for Corporate Investment in Bitcoin. This document lists out many of the important areas of learning that we studied up on as we consider our Bitcoin initiative. And I would encourage everybody there to go look at that document since we're not going to have time to consider all of those things here in this session. Dax and Tom, as experts in your field, we were very fortunate to have you help us get up to speed. Can you highlight for everyone some of the more important considerations for boards to get familiar with as they consider investing in Bitcoin to support corporate governance?
Absolutely. So from a technology perspective, Bitcoin really is novel. It's not backed by anyone. It's an asset that's tracked on an open source ledger that everyone can see and have access to, but no one controls. Transactions can't be reversed. By design, there's only 21 million Bitcoin that can ever exist, and they'll be introduced at a certain fixed supply. There's 24/7 trading that you heard about earlier in these sessions, which is different from traditional markets. And Bitcoins really are not coins at all in a tangible sense. They are ledger entries that are managed through public and private keys. And so if you lose your key, you lose your Bitcoin. So that brings us to the second point, which is custodial arrangements, that given the high stakes of safeguarding and preserving your assets, it's important to make smart decisions about how you will custody the Bitcoin and which custodians you'll use, and also the different internal policies for engaging with those custodians.
So, the market for Bitcoin is pretty unique. I mean, it's 24/7. It's very different from stocks and bonds. I think it's worth talking a little bit more about the market factors, which will then play into some of our SEC disclosures, which we'll talk about later. Tom, can you comment on that?
Yeah, and look, market factors are going to be very important in making the decision to invest in Bitcoin, and the board and management is going to have to look at those. In particular, two are quite unique to Bitcoin. One, unsurprising to the audience, is volatility is a fact of life and very significant in the Bitcoin market. volatility will have a significant impact on accounting and then disclosure as a result, which we'll discuss a little bit later in the presentation. Secondly, liquidity is often an issue that is raised in the Bitcoin market. Although with the increased size of the market, liquidity has significantly improved recently. So what liquidity would look like in a panic situation remains something of an unknown. MicroStrategy, for example, took the view that it was going to hold the cash necessary for day-to-day operations of its business in traditional cash investments to reduce any requirement to have to find immediate liquidity in the Bitcoin market, even as the Bitcoin market liquidity improves.
I want to follow up specifically on fiduciary duties since they make up the legal framework for corporate governance. Tom, can you please explain briefly what fiduciary duties are relevant and how companies can go about satisfying them, especially in the context of investing in Bitcoin?
Sure. There are really two key fiduciary duties that boards need to be aware of in determining to invest in Bitcoin. The first one is a duty of care and the need to get informed. Duty of care requires that boards become informed after deliberative decision making that's based on all the material information that's reasonably available to them. So this is going to be thoughtful, and as a practical matter, look, board members are going to have to do some homework here on Bitcoin. It's an emerging technology in an emerging market. This is not time for investors for directors to be passive and sit as a bump on a log. They need to look closely and clearly at all the benefits and risks and understand potential losses, accounting issues, regulatory uncertainty, and the like. And a key part of that is going to be that board members are entitled to rely on outside experts. And when MicroStrategy was looking at this, you brought in a number of outside experts on Bitcoin to talk to the board about this, right?
Yeah, that's right. I mean, obviously we had yourself and Dax, but we also consulted other experts. And I think getting information directly from experts was very helpful to us in our due diligence. What about the other fiduciary?
Yeah, the second fiduciary duty is duty of loyalty and potential conflicts of interest. And the duty of loyalty requires that fiduciaries act in or decide not to act in a disinterested manner on an independent basis in good faith with an honest belief that the actions in the best interest of the company. That raises the issue of potential conflicts. You'll want to be mindful of any potential conflict of interest you normally have with any company activity. If someone has an interest in a potential broker or custodian you want to use. But the more difficult, maybe Bitcoin specific issue relates to trading of Bitcoin by individuals. It creates the problems of inside information, front running, and the like, and requires a specific Bitcoin trading policy, which we'll discuss further here when we talk about some of the policies and procedures that MicroStrategy's incorporated.
Before we leave the topic of boards, Dax, I'm sure you've advised a lot of boards in the cryptocurrency and the Bitcoin space. Do you have any thoughts you want to add to how to get boards up to speed and how it all comes together for a board decision?
I'll just add one thought, which is that this is a very complex area with lots of moving parts and pieces. And this is an area where I think lawyers can be very helpful. The in-house lawyers and outside advisors to just parse through the various interrelated legal considerations and to help the board and the business make good decisions and to organize the process and the documentation well.
So I think the key takeaway from this lesson is that corporate governance is really the backdrop for pretty much everything that one does to help execute on a Bitcoin strategy. And so you really have to think about governance from the beginning, especially if you're a publicly traded company. It'll also help you get through your board and your governance processes a lot more smoothly if you think about it from the beginning. So that wraps up lesson number 2, and we'll move on to lesson number 3. Policies and procedures are your friends. I think you wanted to kick that one off as well.
Yep. So given the regulatory and corporate governance considerations we just talked about, it's not surprising that our third key legal area to discuss is policies and procedures. So policies and procedures effectively act as the guardrails for the company to invest in Bitcoin. Dax, you helped us a lot in formulating policies and procedures for investment in Bitcoin. Since most other companies out there thinking about investing in Bitcoin are probably in a position similar to what MicroStrategy was in, as in little to no prior experience with Bitcoin. Based on your experience with us, what's your advice to them about how to think about policies and procedures in this context?
Well, from a big picture perspective, I'd say it's important, first of all, just to define clearly the scope of activities and really the investment thesis of a company, to know what you want to do. And that's going to inform really the focus of the policies and procedures that you put in place. Recognize that this is a rapidly evolving area where the legal landscape changes on us frequently. So we need to be nimble and dynamic, like bamboo blowing in the wind. And then to implement guardrails that are tailored to the company's specific objectives on the investment side, calibrated to their organizational and governance structure, their regulatory profile, and those of their selected partners like the custodians and brokers, and also the company's risk appetite on different issues. And just recognize that no two companies are going to be the same, and there will be opportunities to iterate. And then lastly, I guess I would say it is important to look around for best practices and find good advisors. And I think that this conference and the documentations posted will go a long way in that regard.
And I know internal controls is another important area of focus worth flagging, especially for publicly traded companies. Tom, can you comment on this?
Yeah, so policies and procedures are going to be important, and they're going to have to be written down because auditors are going to audit a company's internal controls under Sarbanes-Oxley Section 404. So they're going to look closely at your control environment and how you are purchasing and holding any Bitcoin investments that you make.
Well, with that background on policies and procedures generally and their importance, let's talk about a concrete policy, and that's our Treasury Reserve Policy that we developed for our investment in Bitcoin. It's also one of the documents that we've shared publicly for people to view. I guess both Dax and Tom, when we developed our policy, you helped us identify areas that we should consider including in the Treasury Reserve Policy. Can you touch on some of the sort of more important considerations for that Treasury Reserve Policy? They're maybe more Bitcoin specific.
Sure. Well, from my perspective, one of the first items to consider are your people issues. Who's going to be making the decisions and the strategies, who will be implementing those strategies, who might be providing some sort of oversight and controls for those decisions, and how will all your people work together to both meet sort of the need for speed, but also to keep good controls in place.
Right. What about policies and procedures around how much money a corporation can and should put into, say, Bitcoin versus keeping in cash? I think that was an important issue that we discussed a lot internally. Tom, can you comment on that?
Yeah, no, that's right, Ming. MicroStrategy has taken the view that it wants to hold cash for day-to-day needs of the business, and that allows it to mitigate those liquidity risks we were talking about earlier in Bitcoin. So the board looked at different scenarios and determined what was going to be needed for working capital, as well as how cash reserves might be deployed for ongoing business requirements. This is an example, as Dax said earlier, no companies are the same. It's going to vary from company to company, and you need to take into account what your expected cash flows from your business operations are, any seasonality needs, for example, any short-term business plans as an acquisition in the works, etc. So those are the kind of things you want to look at in terms of identifying these thresholds for working capital and cash.
The other interesting area of internal discussion when it came to the Treasury Reserve Policy was the focus on service providers. And we're going to be talking more about your service providers that are needed for a Bitcoin Treasury Reserve strategy. But Dax, this was new to us, kind of sort of embedding it into the Treasury Reserve Policy. Can you talk a little about why that's important?
Sure. I mean, a custodian and also brokers are going to just be critical to your success or failure. And so it's important in the policy to pre-vet them and to understand what those terms of engagement might be. So, develop effective processes in advance for vetting and contracting with, engaging, and for ongoing monitoring of your custodians and brokers.
Same thing with prohibited activities, Dax. That was another area that we had focused on. Some specific importance here relating to Bitcoin. Can you just comment very briefly on that?
Sure. So you don't want to step into a bear trap unintentionally, or inadvertently. And so it's important to think through in advance the scope of activities you'll be engaged in with your investment thesis, so that you don't inadvertently become, for instance, an exchanger under the money services businesses laws. And it's also important to make sure you have safeguards in place for protecting the safety of your people, and for protecting your assets from some security and other breaches.
Great. We mentioned that we've published our Treasury Reserve policy, and we do hope it's helpful. But I think as somebody mentioned, there's not going to be a one-size-fits-all Treasury Reserve policy. Different companies can and often will have different control processes and risk management objectives and techniques. But hopefully you can take a look at our Treasury Reserve policy for some of the basic areas that we think are most important, at least in our case. Let's move on to one more concrete policy, which was referenced earlier, which is our Bitcoin trading policy. This is another one of the policies that's a little more legal oriented that we thought would be helpful to talk about. Tom, this was an interesting policy for us to work through because there were some parallels to another policy we have, which a lot of publicly traded companies have, which is the insider trading policy relating to company stock. And yet it had a few different wrinkles to it. Can you explain why that's the case?
Yeah, Meg, a Bitcoin trading policy is needed really because there's two things out there that really impact trading. One is fiduciary duties that we talked about earlier, where an insider might take a trading opportunity without offering it to the company first, and where a conflict of interest might arise where an insider engages in front running or manipulation to the detriment of the company. The second item is commodities laws, which broadly parallel Rule 10b-5 under the Securities Act and prohibit manipulative and deceptive devices and trading on the basis of material non-public information and trading on the basis of information that's been obtained through fraud or deception.
Right. So as a result of those things, we put provisions into our Bitcoin trading policy that sound pretty familiar in the context of insider trading policies, like non-trading periods to help prevent potential conflicts of interest between individual personal transactions and company transactions in Bitcoin. We've got provisions that talk about no trading on material non-public information relating to our company's Bitcoin activities. And then you've got prohibitions around front-running company transactions and other things that might constitute market manipulation, et cetera. I think the key takeaway as we wrap up lesson number 3 is that policies and procedures can be really helpful in keeping the corporation in the lane that the corporation wants to be in and avoiding unwanted problems down the road. Now, we just focused on 2 of the more legal-oriented policies. There are other policies that are important that pertain to things like accounting, internal controls, and the like, which our finance colleagues will be talking about in the next session. So you can look forward to that. So that wraps up lesson number 3, and let's move to lesson number 4. Carefully review and select vendors. This lesson is a great example of the cross-functional collaboration that we were talking about earlier and why it's so important. In some other contexts, the topic of vendors might be somewhat bland and not sort of rise to the level of importance that it has here. But it's actually really essential in the context of Bitcoin because you need it for good risk management, given some of the characteristics of Bitcoin. And the vendors that you're likely to use aren't going to be the same vendors that you've worked with before. And the issues are going to be somewhat different from the ones you've probably needed to deal with in investing in other assets like stocks or bonds. Now, the two most important vendors for a buy and hold strategy that MicroStrategy has are your custodians and your brokers, right? You need services to help you acquire your Bitcoin, and then you've got to have a service that's going to help you hold it if you're not going to hold it yourself. One of the great things about this summit is that you'll hear from some of the leading providers of these services in day 2 of this track. So please stay tuned. Now, as an initial matter, when it comes to vendors, you need to figure out what products and services you're going to want from your vendors. For example, if you not only want to buy Bitcoin, but you want to hedge it or enter into derivatives relating to it, then that's a service that one vendor might offer, but another one might not. So you do have to be very careful and not make assumptions about the scope of activities that these different vendors can have. Speaking of the scope of the activities, it reminds me of the first topic, which was the regulatory considerations, Dax. I know you ran through, with us, many of the things to consider in assessing custodians and brokers. Can you touch on why it's important to consider the regulatory profile of the vendors that you're considering?
Absolutely. I mean, the simple answer is because the regulatory profile of your brokers and custodians can have a dramatic impact on the safety of your investment. Consider the type of legal entity that your custodian, for instance, is. Are they a New York limited purpose trust company? Are they a federal OCC bank? What's the relative sophistication of the prudential regulators? What are the capital requirements and bonding requirements that those legal regimes impose on the licensees? Those will net out certain protections for the customers of those entities. It's also important to understand what sort of custody model your vendor uses. Are they a qualified custodian under the securities laws? Are they holding this as fiduciary? Is it a bailment? What are the bankruptcy protections and pass-through insurance protections that are afforded to you? Understanding the domestic protections versus international protections all have an impact. And there really is a fair amount of variation in the regulatory profiles of the custodians and brokers out there.
Yeah, with that as background, there's a lot to consider. So let's now move to contractual considerations for engaging custodians and brokers. Since MicroStrategy, designated Bitcoin as our primary treasury reserve asset, making sure we had an appropriate custodian or custodians was always high on our list. And we knew that we needed brokers as well to help us acquire, our Bitcoin, to help others in negotiating things like, a custodial arrangement or a broker arrangement. We've made public a document that we've used to help identify the issues that, we wanted to focus on, at least in the context of our custodian negotiations. And it's a document called the Contractual Considerations for Digital Asset Custodians, and it is published, and we encourage everybody to look there. Dax, can you touch on some of the more significant issues that companies would likely want to address in striking the contractual arrangements with custodians and brokers? I know there's a lot to cover, but maybe you can highlight a few.
Sure, absolutely. So I guess looking at your list, Ming, we hit briefly already on items 1 and 2 in terms of the regulatory profile of your partner. Item 3 is really critical for understanding how you're going to buy and sell the Bitcoin, and to understand and build into the contract the fact that timing really is of the essence, that prices can fluctuate dramatically, and that can be good and bad for the company. Items 5 and 6 really are sort of the heart and soul of a custodial program, which is really just aimed at keeping your Bitcoin safe, keeping it safeguarded, and make sure the security protocols think through things like hot wallets and cold wallets. And items 9 and 10 are really there to think through in advance in the contract what to do when things go wrong. What sort of insurance limits are available to you? Are you an additional insured? And what are their respective limitations of liability or indemnity obligations or disclaimers in the contract?
Well, clearly there's a lot to consider when thinking about vendors like custodians and brokers. And I think we also got that from the presentation by Fong and Jeremy, and there's not enough time to go through more of it. But I think the takeaway from this lesson is that the learning process that a corporation needs to go through with Bitcoin understanding Bitcoin extends very much to the vendors that would help you implement your Bitcoin corporate strategy. So you need to keep that in mind in your planning process. So that wraps up lesson number 4, and we're in the home stretch now to lesson number 5. Una, do you want to kick us off again for think through public disclosure?
Sure. And this is one of the lessons we're focusing on today because public disclosure is very important to publicly traded companies. We start with the basic principle that publicly traded companies have obligations to disclose material information in a timely way because investors need to consider that information to make informed decisions about buying or selling a company's stock. So to help illustrate some of the disclosure issues we had to think through, let's look at 2 examples. Our initial investment of $250 million in Bitcoin, and then the creation of our Treasury reserve policy. Tom, could you comment a bit more about why these developments are considered material and therefore need to be disclosed?
Sure, to provide just a little bit of background, MicroStrategy held initially about $500 million of cash and cash equivalents. And when the board determined the company was going to do 2 things with that amount of cash, they were first going to do a Dutch auction self-tender offer for up to $250 million of common stock, and then authorized management to invest up to $250 million in Bitcoin. Both of those were material events, and the Bitcoin authorization, because it was so new, was material to the decision of stockholders whether or not to participate in the tender offer. So as a result, the company announced both of those actions simultaneously via press releases and Form 8K filings. At that point, the company is cash flow positive, and the question was now raised, well, what's going to happen with cash generated in excess of the business needs? So the board subsequently determined to adopt that Treasury reserve policy we've been talking about. And so the new policy provides that Bitcoin was going to be the company's primary Treasury reserve asset going forward. And as a result, additional cash was going to be invested in Bitcoin. So again, this is a material change from prior practice, and the company again made a disclosure on Form 8K relating to the adoption of that policy.
Now, people have probably noticed that MicroStrategy sometimes, we put out press releases or 8Ks announcing additional purchases of Bitcoin. And in some of those cases, those are voluntary disclosures by us because we've already disclosed our Treasury reserve policy, for example. But given that Bitcoin is such a new asset class for corporations to invest in, we do think that it can be helpful for the public to know more about our Bitcoin investing, than we might legally need to provide. And so we do sometimes provide voluntary disclosures. Tom, we've just talked about public disclosure around investing in Bitcoin sort of generally, but there's a host of other public disclosure implications that come with investing in Bitcoin. Can you start to touch on those? I think this is where there's a lot of intersection between what we lawyers do and what our finance colleagues do. But I think it is important to start touching on it, and then our finance colleagues will build on some of this in the next slide.
Yeah. So I'll let the finance folks get into it more precisely what Bitcoin GAAP accounting is. But in short, it's very strange and it creates a lot of interesting disclosure considerations. In short, Bitcoin's an intangible asset, treated as an intangible asset. And as an intangible asset, you account for initially at cost, and then in future periods, you look at whether there's been any impairment. And if there's been an impairment, then you have to write the asset down on your balance sheet prior to any sale. You don't write it up. Gain is only recognized when a sale is actually accomplished. So as a result, each quarterly reporting period effectively looks at the lowest price that Bitcoin's ever traded at since its purchase and requires a write down. So what's important about this is people need to understand it's not mark to market, and it's not an impairment charge determined by the price at the end of the quarter, but instead it's marked to the lowest possible price and a corresponding impairment charge at any time during the quarter. So accountants like this approach because it's conservatism, which pervades GAAP accounting, but it will detach the carrying value of Bitcoin on the balance sheet from reality in terms of what the actual market value in the trading markets is of those Bitcoins.
So, with that accounting treatment, Tom, I think it also means that public companies have to then sort of build that into how they describe their business and how they expect it to perform in the future. Can you comment on that?
Yeah, that's right. As we said earlier, volatility is part of the game in dealing with Bitcoin. So there's going to be volatility in your reported earnings because of these impairment charges. And that's going to lead to the issue of people want to really understand what's going on in the business outside of these sort of odd gap impairment charges. So it's going to lead to a bunch of non-GAAP presentation issues. Non-GAAP presentation to basically be able to understand the underlying business and avoid the distortion by impairment charges is a matter of significant concern to the SEC. So it's important that any non-GAAP figures be reported in accordance with Reg G and item 10 of SK, and also they'll have to be clearly explained and reconciled to the most appropriate GAAP metric.
Now, no discussion around SEC filings is probably complete without some mention of the risk factors. And so, Tom, can you touch briefly on that?
Yeah, look, Bitcoin by its nature contains a number of significant risks, and risks beyond what investors may normally be accustomed to when thinking about investments held by the companies in Treasury. So the risks need to be disclosed in the SEC filing so investors understand the risks, and they would be tailored to your particular business. But they're probably going to cover things like the regulatory risks we've talked about and related controls, volatility, and the lack of any supervised market in Bitcoin, the impact of that volatility on your own stock price, the risk of theft and loss that Dax played on earlier, potentially lack of diversification, and the potential liquidity items that we talked about earlier.
Great. Well, that's going to wrap up lesson number 5, which is our last lesson. And I think we're coming up close to the end of our time slot here. Why don't we conclude by just having each of our presenters provide some concluding thoughts. Why don't we start with Dax?
Sure. I guess what I'll say first of all is that Bitcoin creates strategic opportunities. So be strategic here. And I think it's not only appropriate for corporations to have blockchain strategies, but very important for them to consider their very specific Bitcoin strategy as well.
Tom, do you want to go next?
Yeah, look, I think we've talked about, there are a lot of moving parts here, but each of them on their own is manageable. And the key here is coordination and teamwork among the board and senior management, the legal, financial, and accounting teams, and your outside advisors. It's critical to do to make sure that that works so you can develop and execute a Bitcoin strategy that's going to make sense for your organization.
Una, you want to go next?
Sure. And to echo some of Tom's thoughts, I think it's extremely important for companies to find the right external advisors with the necessary Bitcoin expertise. I think our Bitcoin journey would have been very different if we didn't have guidance from our seasoned advisors like Tom and Dax. And I also think having good collaboration among internal teams is key for us. So I would advise other companies to make that a focus.
Sort of building on Una's final thoughts, I would just add that, we were I think we're the first publicly traded company to kind of do what we've done. And there definitely was a lack of a good organized information out there about how to think about Bitcoin in the corporate context, the issues you have to address if you want to have the corporation invest in Bitcoin. And so we're really, really happy to have had the opportunity to make this presentation and also to open source a number of the documents that we developed as part of our journey. And I hope we've helped to start filling that vacuum somewhat through this presentation and those documents. And hopefully we're making it easier for others to pursue a strategy like ours. So with that, thanks everybody for your attention. Hopefully you found it useful, and we'll sign off now. Thanks.